Today on Ask Your Agent, what are some tax benefits that are helpful for homeowners? This is a frequently asked question, but I want to start out by saying that when it comes to something as complicated as taxes, it's always recommended to consult with a tax professional or financial advisor to fully understand the tax benefits and implications of owning a home in Maryland or any other location for that matter. For the purposes of this video, I'll go over some basic information that might be helpful for you if you're considering a home purchase. As for the current benefits a homeowner can reasonably expect with regard to federal income taxes, there is, of course, the mortgage interest deduction. As long as you meet all the requirements and your house qualifies as a homeowner, you can deduct the interest paid on your mortgage from your federal income taxes. This deduction can be especially beneficial during the early years of a mortgage when interest payments are typically higher. Claiming a mortgage tax deduction allows you to lower your taxable income for the year, which in turn can lower how much tax you have to pay. You can deduct interest on your main home, second home, and even other homes like new construction, as long as you and the home meet eligibility requirements set by the IRS. Now, the limit to how much you can deduct depends on when your mortgage loan was taken out. So prior to October 13th, 1989, there was no limit on the amount. Between October 14th, 1989 and December 15th, 2017, the cap was $500,000 if filing separately and $1 million if you're filing jointly. After December 15th, 2017, it decreased to $375,000 if filing separately and $750,000 if jointly. That's where it stands at the time of this recording and obviously is subject to change. Here are 6 things you cannot deduct as mortgage interest. 1. Interest on a reverse mortgage is generally not deductible. 2. If you've lived in a home as a renter before closing on it, the money you paid can't be deducted even if your closing documents refer to those payments as interest. 3. If you received help from an assistance program, which makes interest payments for low-income homeowners, these payments are not deductible. 4. If you received a refund for some of the mortgage interest you've paid, you cannot deduct the refunded amount. 5. Homeowners insurance does not count as mortgage interest. And finally, 6. Closing costs are typically not deductible. Next is property tax deductions. Homeowners who itemize their tax returns can deduct property taxes paid on their main residence and any other real estate they own from their federal income taxes. Maryland offers a homestead property tax credit to help homeowners deal with large assessment increases on their principal residence. The homestead tax credit limits the increase on taxable assessments each year to a fixed percentage. Every county and municipality in Maryland is required to limit taxable assessment increases to 10% or less each year. The Maryland Department of Assessments and Taxation has the information you'll need and forms for application to obtain the tax credit on their website, which I've put a link to below. If you sell your home, you'll most likely owe capital gains taxes, but the benefit of that is that you may qualify for a capital gains tax exclusion of a certain amount from capital gains taxes if you've lived in the home for at least 2 of the 5 years prior to selling it. If you reinvest that money into another house, you'll carry the cost basis forward into the new property, and you wouldn't necessarily need to pay the capital gains at that time. These types of taxes vary from state to state, so you would definitely want to consult a tax professional to learn what responsibilities you'd have when it comes to paying capital gains taxes, either federally or by state, as this is not a one-size-fits-all situation. And lastly, homeowners who make energy-efficient improvements to their homes, such as installing solar panels or upgrading their HVAC system, may be eligible for tax credits or deductions. However, this is another area with wide variations and changing requirements, especially when it comes to solar panels, which as a subject that I will do in a video all about on its own. So be sure and consult a tax professional before claiming any type of credits for energy efficient improvements on federal or state tax returns. I'm Holly Bednar, the Noble Team with eXp Realty. Please reach out to me if you have any questions about this or other real estate matters. As always, a home changes everything.